Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, January 28th, 2013. We'll be looking at the UUP today, at the Bullish Dollar Index Fund, UUP right here. And this is basically just a derivative of the US dollar, and the theory being that as stocks rise, the dollar falls because people are selling the dollar to, in fact, buy stocks. When you have the reverse situation happen, you have people selling stock, then they're in fact buying dollars, or they're obtaining dollars, and that puts a floor in the price of the dollar. And so you can kind of see a relation there that runs the inverse of one another. And right now we can see that we have a hammer candlestick formation. We talked about this at the nice sell-off here, and we got stopped out. And then we're just watching for a hammer candlestick formation to form so we can get in on the long side. We believe the long side is a right trade here because of the overall trend. You got this high point here, 2203, and then 2205, low point here, 2160, and now you're getting higher lows. So you're starting to see an uptrend develop right here, and that's why we're looking for that hammer candlestick formation to form and be looking for a long trade there. So that's why we're doing that. And then today we got confirmation of that with a higher high from one day to the previous, the next, I should say. You can see that you have a higher high point here and a higher low. So that would be the right signal. Everything's right there, and typically I'd set the stop right like that, just 1 cent below the hammer candlestick's low point here. In this particular case, I won't do that. I'm going to show you why here. There's a couple different things we could draw out here. But number one thing that I want to show you why I'm setting the stop in a different place. I'm setting the stop way over here at 2160. So 1 cent below that was where I would actually be. That's what this blue line indicates. That's what I would actually be setting the stop on. I'll be doing that because I think what we have here is an overall chart formation that is basically just an inverse head and shoulders pattern, basically what we're looking at. And we're kind of bouncing around here a little bit, but this is still just the first shoulder here. The head formation dips lower, then we come down for the second shoulder formation, and now we're preparing for taking out this neckline right here. There's a couple different ways you could draw that too, but the main thing here is this pattern over here. As long as you stay above this low point here, it's still in development. You won't have confirmation of this pattern until you close above, meaning rally up here and close above this neckline right here, this line that I've drawn right here between these 2 points. And because this neckline is sloping up, that would also indicate a very bullish move in the UUP or the dollar. So we'll be looking for a very bearish move in the actual stocks. And of course, we're looking for that anyway because we've pointed out that we believe we're overextended in the equity market, and we think that that's just being propelled right now because of fourth quarter, but we think that's going to be running out of steam, and when that happens, then we that massive pullback, and that's when we'll start to see this rally much higher. Also, once you close above this point here, the neckline, you can take distance from this low point here all the way up to the neckline, measure that out mathematically, and then add that to the breakout point. That tells you how high you expect price to go before you actually start to hit some resistance. So there's a big move still in play right here. The stop again would be set off here. You could set a stop right here, but if you continue to just bounce around for a little bit, you could easily get stopped out and then see it do this anyway. One last item to draw your attention to, again, would be supporting the theory that we're overshooting to the downside in the dollar here and overshooting to the upside in the equities would be this overall situation here. You have the low point on the ultimate oscillator well below the 30 line, and then every time since then it's been higher. So we're looking at this as being uptrending here in the momentum indication, and then we can see the price activity for the same time period from this point here all the way down to here. We see it's trending down from the closes. Therefore, we're overshooting to the downside here, and it's unsustainable. That's what we're seeing here on the indication of the momentum is telling us that downward momentum is decreasing. That's why we can tell that from this point here, and so forth and so on. So we're looking at this is actually turning around and starting to move higher. It makes sense to me as well because of this bullish divergence we have here. If you've not been to the free website at PerfectStockAlert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.